Hey, it's Clay at claytrader.com, and here we are with the final Dogecoin cryptocurrency trade update here that I put together a few weeks ago. So this is video 4, and I say the final one just because there's really not much else to talk about because it's no longer, I don't know, are you still going to make money? Is there still? No, everybody is making money at this point as Dogecoin has just absolutely exploded. So for all of you subscribers that originally took that first quote-unquote play that I talked about, then congratulations, you are sitting on a very nice amount of money relative to what you risked. And that's how professionals make money, not just on Dogecoin or cryptocurrencies, but on anything that you're trading. And that's what I want to just circle back to. And I'll put a link down below so you can watch that original video if you want. And I am going to pat myself on the back here a little bit, and I don't mean to, and if you've seen the channel, you see that I'm also very transparent when I screw up, but this is something where if you really do want to learn how to behave like a professional, how to trade like a professional, how to make money like a professional, then you need to go back and see that first video and how everything was mapped out. Specifically, I actually laid out a, hey, if the price hits this amount, we got to get out, we got to cut our losses. Meaning this was actually a risk-controlled base trade plan from the get-go. I understand. Everybody out there says, hey, buy Dogecoin. But you know what? And I'm not going to say everybody, but I am very confident 95% of people out there will tell you to buy something, but they never tell you where you should sell if you're wrong in order to take the loss. What's it? Well, just hold until it goes back up. That's not professional trading, okay? Professional traders don't say, well, just hold because it'll eventually go back up. Professional traders don't sit there and say, hey, diamond hands. No, professional traders say, hey, you know what? This is what the risk profile looks like. This is what is being risked, but let's make sure that what the potential reward is makes sense. And that is what I would argue, and from what I've seen, really differentiates what I've been talking about at Dogecoin compared to, a lot of other people, right? Where it's just buy to the moon. Oh, wait, it's going down. Well, diamond hands. No. You need to understand what you're risking going into the trade. And in this situation, the risk was 50% of your money. And as I said back in video number 1, it was a question of, okay, well, how much money are you willing to lose? Are you able to lose? And whatever that amount is, okay, just plan on potentially losing half of it because that is just how the trade plan set up, which may sound like a lot, but when you're talking about, pennies like this, and again, I'm not going to go into the details of the trade plan. You can see that, but members, subscribers of the channel needed to be willing to lose at least 50% of whatever they put in. So if you were willing to lose $100, well, then the most you could put into this trade was $200 because you could potentially have lost half of that, which would have been $100. But the point here being is we went in with a risk-controlled mindset. We went in understanding how we're going to define being wrong. We went in understanding and being at peace of mind with, okay, if I'm wrong. If we're wrong, that's okay. I can afford to lose that amount. No just throwing darts, no just randomly throwing in money. We actually had a trade plan, and now you're seeing all this play out. So for some of you, I know you've watched every video along the way, and like I said, hopefully you've kind of now seen, okay, wow, this was actually well thought out, well structured from the get-go, and it's totally possible. Trading does not have to be randomness. Trading does not have to be, well, I guess I'll just buy and hold and hope. And if it goes down, I mean, everything goes back up, right? So I'm just going to hold. No. None of that was defined. But let's get to this right now. And I mean, just absolutely exploding. And also, I'm recording this on a Saturday morning. If you're wondering about the background, I'm at my investment property up in northern Michigan, 300 acres. So after this, I'm going to head out with my chainsaw and start to saw stuff apart. It's going to be a great Saturday afternoon. But point being, it is a Saturday morning right now, and the SNL thing has not yet happened. So I'm going to give my thoughts on that, but I also just want to get things updated here. Now, granted, by the time this goes live on Monday, things are going to look different, and we'll just see. But this is interesting because I'm curious, and I'm going to throw this out here regardless, but let's see how history treats us, and I'll explain what that here in a little bit. But the original trade and the original, whoops, forgot my marker. There we go. So the original idea was, all right, well, let's see if it can, entry was at 20 cents, that green line. And then last week it was a question of, okay, well, is it going to break that trend line? And kaboom, Yes, it has broken the trend line, and right now, maybe even threatening going up over the 74-cent mark. But right now, right up there around 72.5 cents. So from the entry point of 20 cents, we're looking at 250%. I think. Let's bring over the calculator here real quick, just to make sure I'm not lying, misleading. There we go. So if we got in, or it's at 0.725. And if we got in at, and we'll multiply that by 100. There we go. I thought so. So right now, basically 263% from where the entry point was. Now think back to the beginning of this video. What did I say the risk was? The risk was half the money, 50%. So we risked 50%, but now you're walking away potentially with 260% and counting. Risk versus reward. That is how professionals do it. Think about it. If you can, and again, it's not going to always be half of your money, but if you can risk 50%, and not every time, not half the time, but just every now and then walk away with not only doubling, but then tripling your money and so on, that's a good risk versus reward ratio. You can be wrong quite a bit and still walk out in the profit. So up and counting here, but as of now, it's a question, okay, well, what do you want to do with the trade plan, right? What do you want to do? Because there's already a couple, times where I'd argue it was probably good to lock in some profits. And now the next big question is, what is going on with SNL? What is going to happen? And in my mind, I would be locking in more profits. And we've gone through this, but we started off, I think it was last week, talked about, let's just say, to keep the math easy, at 100 coins. Well, you could have sold 25 earlier on just to mitigate some risk. You could have sold another 25 when it was at that trend line just in case it didn't break through. Now it has. But now the question becomes, well, this SNL thing, to me, I'm selling another 25 coins. Once again, I'm just using 100 to keep the math simple here. And the reason for that being, a lot of this movement right here could very well be what is known as buy the rumor, sell the news. And I made a comment earlier about, well, let's just see how history treats us. And if this thing has anything to do with former history, it's buy the rumor, sell the news. And I would not be shocked at all to see after SNL, Bitcoin to come down. Now, I'm not saying crashing, going back down to five. I'm not saying anything like that. I'm just saying I could see a bigger pullback here coming after SNL. I get it. Wait, no, that's the big thing that's going to boost it. Yes, but the market is forward looking. Everybody's already factoring that into the decision. So when the thing actually happens, well, then it's happened. So now what? Now, again, I could definitely be wrong. That's why I'm only taking a partial position, because notice the math right there. You could still have a portion of your position left just in case history is wrong, just in case it's not buy the rumor, sell the news. Maybe this thing finally gets up over $1. Well, good thing you still have a portion of your position left. Now, again, this is not, this is just my thoughts. I'm not a professional. I'm not a financial advisor, just throwing my thoughts out there. But this is the thought process that I'd encourage you to at least potentially think about. And it really just depends on, well, what are your thoughts on SNL? If you're like, no, Clay, I am just for sure it's going to go upwards, okay, then you probably shouldn't lock in any profits. But if you're like, yeah, I guess I'm not quite sure what SNL is going to do to it. Well, if you're unsure, then just pull some more profits off the table. I mean, assuming you got in down here, you're up 260%. So that's not a bad area to pull off some more profits. But once more, that goes back to your personal preference. And then as far as the remaining amount of shares, this is what I mean. Well, it's not if you make money anymore. So I'm going to go ahead and get rid of that line. It served its purpose. But really, where do you want to put your stop loss? Well, I mean, at this point, I could easily see people putting your stop loss up there at 50 cents, meaning worst case scenario, everything just crashes. This thing just goes, let's say it goes down to a penny. Well, on the way down to a penny, it'll take you out at 50 cents. Meaning worst case now, you're up over 100%. You're up 150% in like a crash type scenario. Think about that. If your biggest stress, if your biggest worry in a trade is, oh, wow, my biggest stress is I only make 150%. When again, what did you risk? 50%. Yet your biggest risk at this point is making 150%. Do you see how professionals, do you see how it's possible to actually make money over the long haul when you structure proper trade plans? And I want to repeat that again, just to drive that home. When your biggest stress now is, everything went wrong and I only made 150%. even though I was risking 50% at the start, that is a very, very good spot to be in. And I'm saying that's just an idea of where you could potentially put it. But maybe you're saying, no, Clay, I want to make at least 200%. Okay, well then get that stop loss up to 60 cents. So it's all a give and take, but make sure you got a stop loss in just in case something crazy goes on. You're able to still lock in a good amount of money. But other than that, or you could just use that 50 period moving average, right? The keyword being moving. So as time goes by, where are we at time wise? Oh, at 10 minutes. Okay, not too bad. That line's just going to continue to move and move and move. So you can just use that as basically a trailing stop loss, meaning you're always just putting your stop loss slightly below that line, slightly below that line. So notice as time goes by, your stop loss is going to continue to increase and increase and increase. And, that is something else. So meaning you just sit back and you follow that moving average and, who knows how much you're going to make. But at this point, given the moving average is at 50 cents, well, hey, there you go. You're making worst case 150%. So like I said, this is going to be my final update on this one, just because at this point, it's really just following it up and let's see how high it goes. Not a whole lot more that can be updated on it. And at this point, hopefully you've scaled out some of your profit. I mean, if you're just like, nope, I went all in and I'm still all in. All right, I get it right now. You're saying, see, and I played it right. Yeah, but over the long haul, I don't know if those are necessarily the best habits that are going to keep you in the game for the long haul. But like I said, there's always nooks and crannies to every trade plan. But before I go, a final few things here. If you did enjoy this little, trade series, whatever you want to call it, where I call things out in real time, like I said, structure the trade plan together, and you want me to do more videos like this, then two things that I'd like for you to do: hit the like button and then leave a comment down below, even if it's just a thumbs up emoji, but a very, very basic comment. But thumbs up, basic comment, those two things communicate to me that this was a worthwhile video series to put together and that you enjoyed it, you learned from it, and you would like for me to do more. Because as I've said in past videos, this is all still very experimental in terms of these types of videos. So I'm certainly looking for feedback. So if you, like I said, enjoyed it, hit the like button, comment down below, and that'll communicate to me whether or not I should maybe do some more of these over time. But as far as the Dogecoin play is concerned, absolute killer success. Risking 50% and now 260% currently where the price is at. And we'll see what happens on Saturday. So tonight, from the reference point of when I'm recording, but when you see this on Monday, we'll see. Either history has proved to be right and it was a buy the rumor, sell the news, and the price is down quite a bit more from 70 cents. Or who knows, maybe this bucks the trend of history, does not do the buy the rumor, sell the news, and now this thing's maybe up over $1, which is fine by me because given the entry point was 20 cents and given the thought process, no matter what happens, you're still going to be involved in the trade. I mean, hey, that's a good spot to be in. But congratulations to, like I said, all of you that, followed along and maybe, took the trade at 20 cents or whenever. And you absolutely killed it. But like I said, professionals make money with an actual trade plan. Honor your risk, define your risk, figure out what that needs to be. And you're not always going to be right. There's going to be losses along the way, but hey, that's part of being a trader. But if you follow proper risk protocol, if you follow proper management protocol in terms of your downside, then you can become a professional. You can stay in the game for the long haul. And ultimately, assuming you want to, make money consistently, that's what it's all about. And you, like I said, you saw this play out perfectly. So hopefully you got something out of it. But like I said, if you enjoyed the video, hit the like button, leave a comment below. Thanks for watching. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.